This overview shows how the Vision Corporation sample application helps you learn how to use Oracle Planning and Budgeting Cloud Service to better plan, forecast, and track the financial performance of your business. This overview demonstrates a desktop application. Mobile device applications may differ. Your administrator sets up task lists to help manage budget cycles. For example, a task might help you complete forms, launch business rules, or submit planning units for approval. Tasks can display instructions, due dates, completed dates, and alerts. They can include web pages, forms, approvals, business rules, and descriptions. Budgets are tracked by planning units. A planning unit is a slice of data at the intersection of a scenario, for example, plan, a time period, for example, FY14, and an entity or part of an entity, for example, a department or business unit. It's the basic unit for all activities involving plan data. Plans contain subsets of your company's data organized to help you manage your business. Variances are flagged using data validation. In this plan, any negative variance greater than 10% is flagged, and you must enter an explanation. You can design forms with predefined validation rules to help implement business policies and practices, and choose cell colors and messages to be displayed if a validation rule is triggered. Organizations plan revenue using different methods. For Vision, product revenue is calculated from units and average sales price. You can change forecast assumptions about volume, pricing, and gross margin for each product on the plan. The plan displays a slice of data filtered by product family. To display data for a different product family, in Settings, select User Variables, select a different product family, click OK, and then Save. When you return to the revenue plan, it displays figures for the new product family. This helps users focus only on the portion of the data they need. Operating expenses consist of compensation, capital expenditures, and office expenses. Organizations plan operating expenses in many ways. This application uses a driver-based approach. The administrator selects a method to calculate the rate, for example, last year actual, a rate, such as percent of revenue or an inflation factor, and the driver. To change these derived amounts, enter new values for the driver rates, or change the values in the year total column. Expense drivers help determine operating expenses. For example, the number of sales calls and travel percentage can be used to derive travel and entertainment expenses. When you make changes to these drivers, operating expenses are automatically recalculated. The F next to the sales calls account indicates that it's a derived value. Clicking it displays the formula used to derive the value. In this case, the figure is derived from total unit sales for the year, average order size, close percentage, leads generated, and leads requiring an in-person visit. The capital expenditure plan calculates depreciation for new capital assets by asset class and useful life. Blue cells contain supporting detail. Supporting detail allows you to enter your own calculations below the account level to document plan details, in this case indicating that the new laptops number is derived by purchasing 3 laptops at $2,000 each. You can also attach documents or URLs to a data cell. Review Plan versus Target compares the bottom-up plan to top-down targets set by senior management. On this plan, there's a data validation that checks for an out-of-tolerance condition. If there's a negative variance of more than 10%, you can't submit the plan until adjustments are made. For more information about Oracle Planning and Budgeting Cloud Service or other Oracle products, visit the link shown here.